Folks, thanks for coming tonight. We really appreciate it. Great turnout for a Tuesday night in the summer. A hot Tuesday night in the summer. Actually, it's quite comfortable. Comfortable? Yeah, it's hot now. It's just the sun went away and the clouds went away and it got a little hot. Comfortable in here, right? Feels good. Just keep everybody awake.
I will. Don't you worry.
We were talking before, we had met these ladies almost a year ago at a conference that we attended. We thought it would be a great idea to bring them here to the township to give as much information to the folks in town on property tax relief. And that's what they're about to do. So they're from the Division of Taxation, and it's Alexis and Tina. And they are hopefully going to have a lot of good information for you. They'll do the presentation, and whatever questions you have, by all means, can they interrupt?
Absolutely.
They can interrupt, so they don't have a set plan. So feel free to shout out a question, raise your hand, what have you. But hopefully you'll find this informative, and hopefully we'll be able to save you some tax money. So thanks all for coming, and appreciate your attendance. Alexis?
Thank you, Rob. Good evening, ladies and gentlemen. How are we? Okay, I would much rather be sitting on the beach right now, being all the way down here, like all of you lucky people who live down here, but that's okay. We'll talk about property tax relief, shall we? I am Alexis DeRosa. I have been with the division for 16 years in January. I was a very young girl when I started, so you don't have to sit there and figure out how old I am. But I have been in some sort of training capacity for 13 of those years. I currently supervise what is known as the Outreach Department for the Division of Taxation. So we do public events like this one. We go out and speak to groups like yourself about property tax relief. We also do a lot of work with small business owners in the state of New Jersey with helping them to get registered and what their tax implications will be being a small business in New Jersey. We go out and do events with tax professionals on tax updates and anything else that anybody wants to hear us talk about, we try to meet the need. Today you are here with Tina and myself to speak about property tax relief. There are a few programs available to New Jersey homeowners and some tenants in the state of New Jersey, and we're going to be discussing those this evening. The first one is Form NJ 1040H. We'll spend very little time on that. We're also going to speak about the homestead benefit, which is for homeowners only. And we will also be talking about the biggest hot topic, which is the property tax reimbursement. All of these programs are significant to Tina and myself working for the Division of Taxation, because although they are tax relief as opposed to tax collection, we do administer them at the Division of Taxation. So that is the reason why the tax ladies are coming to talk to you about tax relief. So the first program that is available to New Jersey residents is the Form NJ 1040H. Several years back, most of you probably are aware, if you're familiar with anything to do with property tax relief with the state of New Jersey, all property tax relief is subject to change due to the budget, which is passed annually. And several years back, the budget was passed and it suspended the tenant rebate for our tenant people that live in the state of New Jersey. As a result of that, we had to come up with some sort of mechanism for our tenant residents of New Jersey that still wanted to get that $50 property tax credit that is given to taxpayers in New Jersey. Okay? So every New Jersey resident, whether a homeowner or a tenant, is able to file their taxes and claim a property tax deduction or credit. If you were a certain eligible filer as a tenant, we had to provide a mechanism for those individuals to still get this extra $50 because they were not going to be getting it with their homestead benefit. As a result of that, we created Form NJ 1040H. It is the mechanism put in place for tenant residents of New Jersey who fit this criteria. They're not required to file a tax return, meaning their income falls below our filing threshold. If your income falls below that filing threshold, there's no way for you to get that property tax credit with a tax return. This is the way that you would get it. In addition to that, they had to not own a residence as of 10/1. So basically what we're saying here is they're age 65 or older or disabled, they're not filing a tax return, and they're not a homeowner. That's the stipulation for qualifying for this particular credit. How many homeowners do we have in the house tonight? Everybody, good. Okay. As a homeowner, your $50 property tax credit, if you fall into this situation, meaning you're age 65 or older or disabled, you're not filing a tax return because your income's not high enough, and you own a residence, you're getting this extra $50 with your homestead benefit. Okay, so this was strictly a mechanism put into place for our tenant residents that were unable to get that $50 credit by filing a homestead benefit or a tax return. So homestead benefit, let's talk a little bit about that. Over the years, this program has been known as a lot of things. And for any of you who have lived in New Jersey for any length of time, you will probably remember its first name, which was New Jersey Saver. Everybody remember that? NJ Saver? Then it was called Fair Rebate. Then it was Homestead Rebate. And most recently, we've seen it turn into Homestead Benefit. So the basic difference between the other programs and this program is previous to it being the benefit, some of you may recall you used to get a really big check in the mail. Everybody remember that? For their Homestead Rebate or Saver or whatever it was called during that administration? The difference now is the homestead benefit is paid as a direct credit to your property tax bill. Okay? So the qualifications for this particular program is that you have to have owned and lived in your residence as of 10/1 for any application year. That's the magic date that they have chosen, legislation has chosen. Your income, if you are filing as 65 or older or disabled, must be $150,000 or less. For everyone else in the state, it's $75,000 or less. As far as income is concerned, when we say what's your income amount, we're referring to, with this program, your New Jersey gross income. Okay? So for homestead benefit purposes, income that's not taxed to New Jersey, such as disability pension, Social Security income, items like that are not included with this income total. We're basically telling you to take your gross income line from your New Jersey tax return. That is the deciding factor of whether you fall under these income limits. The way that individuals file for this program, this is the green packet that comes. Everybody familiar with that? You have a question, sir? Yes. The question was, is that combined income if you're married? The answer is yes. So if you are married, it's $150,000 combined or less. True, very true. That's a very good point, sir. The question was, what if you put the house under the one spouse's name? My parents fall into that situation. The house is in my mother's name. But because they filed married filing jointly, when taken into consideration for this, they take their total gross income on their tax return. Okay? To file for this program, it's the green packet that we get in the mail, usually in the fall. Historically, you tear off the edges, you open it up, you're given that ID and PIN number, you either call the call center, you call the toll-free number, or you go on to our website. You file the application in most instances electronically. You get the confirmation number, you hold on to that for your records, and then we pay out as a direct credit to your tax office. Some of you may remember, we certainly do in the building, that the 2012 benefit had a very severe delay. Does anybody recall that? Okay. So homestead benefit's kind of like your taxes, okay? We are in the year of 2016, but we filed our 2015 taxes this year. Everybody agree? Homestead benefit was the same way. In 2012, we filed our 2012. We filed for that benefit in 2013. It was supposed to be paid out in 2014. It was delayed until 2015. So try explaining that. It's a little confusing. Why did I get this thing in the mail? Oh, well, it's 2015. That's your 2012 benefit. But basically what happened in that year was what I was speaking upon before. There are a lot of things that we could see affect these programs based upon the state budget passing and if there's funding available. And at the time, there was not. So the delay had to take place. So everybody received their credits for their 2012 in the year of 2015. You all probably just got your homestead benefit in May of this year. Does anybody remember seeing that on an amended property tax bill? Okay. That was your 2013 homestead benefit. They were paid out in May of this year. And what happens is we send all of the data to your local township. Your local township will reprint for you an amended property tax bill showing the amount that you actually owe less your homestead benefit amount. Okay? Okay. This has pretty much been covered. Okay. We do have new information for you today regarding the 2014 homestead benefit. There was information released on our website about 2 weeks ago, I believe. The applications for 2014 are slotted to be sent mid-September of this year. So you're going to all get that green packet in the mail, probably by the end of September. Go ahead.
Can I say one thing? If you, in a prior year, added an email address when you were filing, make sure that in mid-September you check your email. Because if you entered an email address on your prior year application, your new application for this year will come in your email and you won't get a green packet in the mail. So very important, check your email.
I was one of those people who put my email address in 2 years ago, and I had to sign in at our lobby like a taxpayer, and I said, I never got my application in the mail, and they looked up my account and said it was emailed to you, and I was like, oh, that person that didn't check my email. Also, to piggyback on what Tina just said, this is also very important. My homestead benefit application went to my spam. Okay? So if you say, I didn't get my homestead benefit application, check your spam before you determine that you didn't get it. So those are two little tips as far as what we're looking for this September. One of the things that we want to speak about as far as homestead benefit is concerned is more in tune to that delay we saw in 2012. One of the questions on the application asks you, are you going to be moving? Because if you're going to be moving, your homestead benefit is going to stay with your property. Okay? So in that question that asks you, are you going to be moving? If you answer that question as though there's a potential for you to move, we will be sending you a paper check as opposed to allowing the credit stay with the property. So here's what I told my parents this year, and this was very important. They are getting the house together, thinking about downsizing, looking to move. They just don't know when that's going to happen. With 2012, we saw a pretty significant delay. There was a really strong chance that some people could have moved from 2012 to 2015, right? Okay? Do you think they're thinking about their homestead benefit when they go to closing? Probably not. So as a result of that, what we've been saying to people is if you think there's remotely an opportunity that you could possibly be moving, make sure you answer that question accordingly so that you receive your homestead benefit and it doesn't stay with your property. With that delay, we received an influx of phone calls in our call center of people who said, I moved. I didn't get my homestead benefit. What do I do now? And the most that we were able to tell them was, unfortunately, you're going to have to go back to whoever you went to for your closing, the lawyer or whoever handled your closing agreement, and see if there's a way that you can get that back. That's a lot. It's complicated. So word to the wise, if you think you're going to be moving, indicate that with that question, and then you'll get a paper check and it won't stay with the property. Any questions about homestead benefit before we move forward? Yes, sir.
Just regarding the relief fund, not the relief, the benefit check coming back.
Yes.
My email may be changing because of I have to switch to a different carrier. Okay, so how would I go about that if I did put down my email in?
So you're telling me that you put an email in, but it's now changed. Call our call center. We have a mechanism put in place where we can either edit it or pull it completely so yours will be mailed to you. 609-292-6400. Okay. We have staff available Monday from 8:30 a.m. to 6 p.m. Tuesday through Friday, 8:30 a.m. to 4:30 p.m. If Monday happens to fall on a state holiday, our extended hours are on Tuesday. Yes, ma'am.
I did move in 2015, and I did not.
You did not get your benefit? Okay, so you moved and you did not receive your benefit. I can tell you you can call the call center, but what they're going to say to you is you're going to need to go back to whoever handled your closing. Okay? So we saw a lot of this because of the fact that the delay exists. And it's just the way that it is. So the only thing that we can do is just empower you guys with the knowledge so you know going forward, if you think you're going to move, even after you filed, maybe you filed and at the time you had no idea you were going to move, and then it happens for you. Call our call center. Okay? At any point, call our call center. We have things that we can do to take care of that for you.
Call
Okay?
our call center right away
Mm-hmm.
if you move, like right away, so that we can catch it before it's credited to your property tax bill. Once they're credited, we can't pull them back. So that's the point where you would have to go to the closing agent. So if you move, call right away prior to the benefits being issued.
We know you're the last people. We're the last people that you guys think about when you're moving, but we're here to tell you it's important to do so.
Don't forget.
Any other questions on homestead benefit? Yes, sir.
That topic, who's responsible for reimbursing us that money?
Who's responsible for reimbursing you the money on your property taxes? The program is a state program by the state of New Jersey. It's administered by the Division of Taxation.
Right, but once we have relocated elsewhere, the money was credited to the tax
Right.
account. You mentioned that we should go back to our closing
Right.
facilitator.
Here's what I can tell you. Once that money is released, the state of New Jersey can no longer issue you that money. The township can no longer issue you that money because it was credited to the bill. So the most that you can do is to get in touch with whoever handled your closing. Usually, I can tell you what has happened that we've seen. There have been, if a lawyer handled your closing, for example, they could reach out to the party that purchased your house, okay, and arrange for there to be some sort of payment made in the amount of the homestead benefit. But it's kind of messy, if you can imagine, right? It's kind of messy. So knowing this ahead of time is a better plan. And as soon as you move, notifying the Division of Taxation is the best thing for you to do. You're welcome. Any other questions on homestead benefit? Okay. All right, so let's talk about property tax reimbursement. This is the most popular property tax relief program that is administered by the Division of Taxation. It's a state of New Jersey program. In order to be eligible for the program, you have to have been 65 or older or receiving Social Security disability as of 12/31 of 2014 to qualify for this application year. That date changes every year. Okay? You also have to have lived in New Jersey for 10 consecutive years. So if you lived in New Jersey all your life, you decided to be a trader and move to Florida for a few years, but it was too hot for you, so you came back. You have to reestablish those 10 years. So it's 10 consecutive years living in the state of New Jersey. You also have to have owned and lived in your current residence for 3 consecutive years. And your property taxes have to have been paid. We do allow some leeway with that. If you're slightly delinquent with property taxes, you have until June 1st of the following year to get them paid in full in order to qualify for the program. Just want to see what my next slide is. Okay. One of the main reasons why we say the property taxes have to be paid is because the way that this program is designed is to reimburse you on the amount of increase in your property taxes if you meet these guidelines. So if the property taxes are not paid, you're not going to receive a reimbursement. Make sense? Okay. The last and final qualification for property tax reimbursement are our income limits, which for those of you who are already familiar with the program are aware that they've drastically increased over the years. This program has been around since 1997, and back then, the income limits, I believe, starting out were about $17,000, which is like nothing. That's nothing at all. And throughout the years, we've seen them increase pretty drastically year by year. For 2014, our income limit was $85,553 for this program. And for 2015, the printed amount in the booklet was $87,007. Now, you'll notice my final bullet point on this slide, another budget change. Budget changes happen when the budget is signed into law on July 1. This year, we saw that original printed income limit of $87,007 get knocked back to $70,000. So here's what that means for people who are already enrolled in property tax reimbursement. If your income is over the original printed amount in the booklet, which this year was $87,007, you're not qualified. Your income has to fall below that amount. Now, when the income limit got dropped back to $70,000, what's going to happen to those people that fall in between $70,000 and that $87,007? What's going to happen is they're not going to receive a check, but they'll still remain enrolled in the program and receive a PTR 2 the following year and continue on with the same base year. Okay? So that 70,000 limit means any individuals with income of 70,000 or less will receive their check and stay enrolled in the program. So those are the main differences. Falling between the $70,000 and $87,007, you're not going to get a check, but you'll stay in the program. Under the $70,000, you'll get a check and stay in the program. Okay?
And that's for the amount of, I'm sorry.
No, that's fine. You didn't, but that's okay.
He's a teacher.
Shame on you.
That's only for the increase, but that's for the overall increase in your tax bill, including the three levies, the county, the school, and the municipal.
Yes. Yes, that the question was, that's your total property tax bill. The answer is yes. Okay? Increase. Correct. If your taxes go down, if you're one of those lucky individuals in the state where your taxes go down, there's no increase to reimburse in that instance. I know. Well, my taxes went down this year.
Can we move that same county?
Certainly can. I live in Burlington County, so it's, not near the shore. Do you see that frequently? Probably.
Now, you're not automatically sent that, right?
Okay, the question was, are you automatically sent this application? Through data matching in our system, we're pretty easily able to determine when someone turns age 65 or older. So in that instance, yes, those individuals will automatically receive a PTR1 application, but we do miss people. So tell your friends, tell your neighbors, if you know somebody who's qualified for this program and they did not receive an application, to give us a call and we can send one out to them. Yes, sir.
For those of us who have not reached that golden age yet, or close. Is there a cutoff date during the year for age 65 applicants to file?
Good question. The question was, is there a cutoff date during the year for people to file for this program? The answer is yes, but I don't want to steal Tina's line, so I'm going to let her tell you that nugget of gold.
A cutoff to file the application or a cutoff to turn 65?
Well, either one. I guess we turn 65 in June and July
Okay.
You have to be 65 by December 31st
of that year.
of,
So if I was to turn 65 by December 2nd of this year, I could file for not the previous year. I have to
Not
wait
exactly.
I have to wait a whole year to file.
Notice this date. We're in the year of 2016, right? So with what you're saying, it would make sense that you would have to be qualified as of December 31st of 2015. The reason why it's a 2-year look back and it's 2014 for this application year is because it's 2 years of information we're comparing. Okay? So for your 2015 application, we're looking at 2015 and 2014. Whatever the amount of increase was in your property taxes, that's what you're getting as a reimbursement. So hence the reason why it's that. So next year, for the 2016 application booklet, the guideline will be you must have been 65 or older as of December 31st of 2015. Okay? Yes, sir.
I'm looking at the booklet, and on page, whatever it is, on the 2014 and 2015, it lists all the income.
Correct.
Now, after age 65, we have a lot of deductions. Why not deductions over here and not net income?
Why not AGI?
And we're gonna,
Because that's a little bit fairer than this, because let's assume you have $100,000 here, but you got $50,000 in medical expenses.
right. I understand where you're coming from with that.
The answer is,
This program, when it was designed, was based upon PAAD guidelines. And that is the reason for the income being categorized the way it does. This program, tallying up the income, has nothing to do with any tax return you file. It is strictly by the income worksheet that's in this booklet. So what do I mean by that? Well, like I said with homestead benefit, you're taking a line off of your NJ 1040. Pretty easy. With this program, items of income that are not included as taxable income for New Jersey are included when determining eligibility for property tax reimbursement. And I have them on the slide here. So things like Social Security, okay, they're included. As far as lottery winnings are concerned, lottery winnings is an area, well, I know. You know, that scratch off you won $5 on.
lottery winner. How many use one lottery? I'm sorry.
No, it's okay.
Let's be real.
I understand your concern. I don't make up the rules. I just talk about them. Yes.
Both part on the homeowner, both parties have to be 65 at the same time?
Good question, sir. The question was, do both parties have to be 65 at the same time? The answer is no. Okay. Only one, in the case of a married couple, only one of those individuals has to meet the guideline for age 65 or older or disabled.
And you have to combine both incomes.
That's correct. You do. You definitely do. Hey, I can tell you, it's a lot better than 17,000. But I do understand where you're coming from. I do. So as far as income is concerned, yes, we do have an income worksheet that is included with the application that assists you with calculating what your income is considered for property tax reimbursement purposes. At the bottom, it asks you if you're below the limits, and then you can continue on with page 3 of the application. One item of income that I would like to call a little bit of attention. One item of income that I would like to call a little attention to is something that has changed in recent years. 2012, there was a court case that went before tax court, basically challenging the way that the division was considering pension, annuity, and IRA income for the purpose of this program. Prior to 2012, we were saying, we want you to report to us for property tax reimbursement purposes whatever your total distribution was for the year for your pension, your IRA, and your annuities. There was a woman, Rita Hall versus the director, said, wait a minute, Mr. Director. Part of the money that I'm reporting for my pension, annuity, or IRA is my contributions that came out of my pocket. I put it in there. Why do I have to include that? She was right, and she won. So as a result of that, that is an instance where you can take some sort of deduction. What we're asking you to report now for the purposes of property tax reimbursement is whatever your New Jersey taxable portion of your pension, annuity, or IRA withdrawal is. Okay? So that means any amount of earnings, not including what you contributed to the program, which was a good thing. One little difficulty that I want to caution you as, U.S. military pension, disability pension, and Roth IRAs are tax-exempt income in the state of New Jersey, not reported on your NJ 1040. But for the purpose of this program, they need to be treated like standard IRAs, pensions, and annuities. Okay? So what that means is, if you're not reporting it for your tax purposes, you're going to have to take a couple of extra steps to determine what your taxable portion would be considered, per se. Okay? Obviously, if you need any help with any of this, when it's application season, which it is right now, we have regional information centers set out throughout the state of New Jersey. Closest one to here would probably be in Neptune. We also have one in Northfield and Camden. We have one in Fairlawn, Newark, Somerville, and Trenton is our home base. They provide walk-in service Monday through Friday, 8:30 to 4:30 p.m. They will fill these out for you, stamp them.
Right on Route 35.
Thank you. Right off of Route 35. I think is it not New Road?
What is it called?
Regional information.
It is called the Regional Information Center. If you go to our homepage, you can see the address right at the bottom of the screen. Any questions about pension treatment? Yes, sir.
Yeah, what are they gonna do for, any residents that are over that thing, but yet it's, you're still getting hammered on taxes in the state of New Jersey?
I understand where you're coming from. My parents fall into that situation. It doesn't mean that they make a lot, but they fall into that situation. I don't know. I don't know. That's something, obviously, your local legislature would be a route that you'd probably want to go.
The address is 1828 West Lake Avenue in Neptune City.
And West Lake Avenue is right off of 35. You literally can see the building. It's on the corner.
Yes.
Thank you.
You're welcome.
Thank you. Thank you.
Gotta love the internet.
Right there.
Yes, sir.
Excuse me, is the tax reimbursement program and the homeowners rebate program two separate things?
Yes, they are. The homestead benefit.
Qualify for both?
Good question. The homestead benefit and the property tax reimbursement are two completely separate programs. You can file for and receive both of them. They have separate qualifications, separate applications, but you can qualify and receive both of them, which is good. The basic rule that's in place as far as our administering these programs is you'll never receive back from us more than you actually paid in property taxes, but you can receive up to what you paid, essentially. As years go on, since this program started in 1997, we see people getting very large checks for this program. Okay? So that's a huge thing. Yes, sir.
So it was 3 years in the same home?
3 consecutive years.
3 years, it just dates you bought? The first I bought in September, so therefore in September is 2 years.
Good
Calendar
question.
year.
I can tell you, sir, the best way to determine if you're meeting the guidelines, on page 1 of the application, under eligibility requirements, for each one of those qualifications I gave you, we just give you the simplified way of seeing them. They'll give you actual dates that you had to actually be in the home by. You're very welcome. And each year that changes to the next year up. I don't know why this isn't working. Andrew, I'm frozen.
Yep.
One moment, please. Is there any other questions while we're waiting? Yes, ma'am.
These programs, are they only for properties that you have homes on? Or if you own more than one piece of property, or if you have like, a property that has a home and a property that is vacant?
That's a very good question. The question was, what if you own more than one property? Okay, are these available for? Property tax relief in the state of New Jersey is available only to what is considered your principal residence. Okay? So what that basically means is if you have a vacation home, you can only claim it on the actual home that you consider your principal residence. Where is your driver's license to? Where are you registered to vote? Those are usually common questions we give out to assist people with determining what's considered their principal residence.
Building lot would not be considered.
Correct. Exactly. Correct. The question was, so a lot of land would not be considered your principal residence. The answer is no.
Domicile.
Right. Where is your domicile? Yes, sir.
Someone asked me to answer this, is there any relief for a veteran in this?
Good question. Is there any relief for a veteran? There is relief for veterans through the local township level. The state of New Jersey does not administer relief for veterans. That is administered through the local township. I know for disabled veterans, 100% disabled, they can actually apply to have their home zoned as a tax-free residence. Okay, zoned like a church, basically, essentially. And that's an application process that they go through the local township. In addition to that, there's also a senior deduction and a veterans deduction that are available through the township as well. I believe each one of those are maximum of about $250. Don't quote me on that. That's information that you would all want to direct to your local municipality. But yes, there is.
Since he's here, you might be able to ask a question.
I'm doing IT-related stuff, so I didn't hear the question.
He's handling our technical difficulties.
So veterans and senior deductions, applications for that.
They are available at town hall.
What's the veteran? What's the veteran? Any 2 years, 3 years? 1 year?
Again, there is a definition, it is the
DD, whatever the S.
DD Form 214, that you discharge, and your discharge is gonna determine your status, so it's Department of Defense Form 214.
and it is the tax assessor's office that can assist you.
Tax assessor's office, everybody. Looks like we're back in business. Yay!
And you said that you were working on the year 2014,
Yes, the application that we're filing right now is for 2015. 2014 is for the other program, Homestead Benefit. They're two different programs. We're a little year behind in
and hopefully
Homestead
you
Benefit.
get to 65 so you can get to this stuff, but then you have to wait another couple of years after that to.
Right. Well, Homestead Benefit is available to all homeowners in New Jersey, regardless of age or disability status, as long as you're under the income limits for Homestead Benefit. Property tax reimbursement is strictly for residents, homeowners of New Jersey that are age 65 or older or deemed disabled by Social Security Administration.
See, one thing you should be aware of, they should be aware of too, is
Thank you, Andrew.
your income level changes.
Yes.
Based on your status, if you work full-time, if you work part-time, if you take Social Security benefit before you get the full benefit, all of that.
Right.
Plus the fact that certain annuities that you have require you to take a distribution. Usually, the annuity will require that you take a distribution, for example, at 70 or 70 and a half years old.
Right.
So what that does is that may push you
Right.
beyond. So there are times when you're eligible, and
Right.
there are times when you're ineligible. You should be aware of that because it causes problems down the road.
It's very true, and I'm going to defer that statement to later in the presentation because Tina will be talking about that is very significant, extremely.
Oh, I went.
Oh, that's you. Oh, you went already. Thank you. You're up.
I love
Tina's
It's
up.
my turn.
I'm done.
Hi, everybody. Oh.
Question?
Yes, sir.
The total amounts, 85,000 and 87,000 respectively, and they tied to anything, cost of living, income,
No.
tied there?
No.
Pulled out of the air,
They're legislatively determined on an annual basis.
pulled out of the air.
Well, legislatively determined on an annual basis.
Next year it could be anything.
Progressively, we've seen them like about $1,000 roughly every year more. That's roughly what we see. $1,000 to $2,000 more, roughly.
And property taxes have gone up how much?
I know,
Okay, thank you.
except for mine.
All right.
Last 2 years, there was no raise in the municipal level.
Was it
levy.
okay?
No raise.
I don't know about that, my check is more clear.
All right, everybody. So
Tina's like, okay.
moving on. So the deadline for the property tax reimbursement has been extended. The original deadline was June 1st, and we've extended it to October 17th. So that's a good thing for everybody who hasn't filed yet, and that's why we're here tonight. You still have time to file. Reimbursement checks for people who did file already, who filed by May 1st, those checks began being issued on July 15th, 2016. Anybody filing after May 2nd, checks will start being issued September 1st, 2016. So what kind of happens is starting, if you file now, we're just processing applications as they come in, and all of those checks will start to go out September 1st. Okay? So for first-time filers, you're filing Form PTR-1, which is the form that we gave out tonight. It establishes 2014 as your base year, and 2015 is what you're going to get the difference in between 2014 and 15. So you're going to have 2014 as a base year. And then I just want to say that if, I'm going to kind of skip a little bit. Is there anybody in here who thinks that they might have been eligible before, earlier than now? Because this is important. If you think that you could have been eligible a year or two ago, 3 years ago, 5 years ago, 10 years ago, and that you could have been eligible all these years, you can go back and file these PTR1 applications back as far as you think you were eligible. If you do that, you won't receive checks for every one of those years, but what you will do is establish an earlier base year. So instead of your base year being 2014 and getting the difference between 2014 and 15, you could get the difference between 2015 and, I don't know, 5-10 years ago if you were eligible, 2 years ago if you were eligible. It makes a difference because you guys all know your property taxes go up. So you're getting a bigger check if they've gone up over 5 years and you've been eligible. Okay, so if anybody thinks they were eligible prior to 2014, take a look back at the previous year qualifications that are on our website. And all of the prior year applications are on our website, PTR1 Books, for every year back to when the program began in 1997. So you can take a look back and see if you qualified, and you'd fill out the PTR1 applications from our website for every year consecutively. Okay. Second year filers and later, you're filing a PTR2 form. Those come to you pre-printed. So once you file in your first year the PTR1 form, every year after that, you will get a PTR2 form that's pre-printed with your information, and you'll start filling out just 1 year worth of information, the current year. Okay? So PTR2s every year after your first year, as long as you continue to be eligible, and as long as there's continuous eligibility, and you're only verifying that 1 year. So for 2015, you would only verify 2015 information.
You gotta be 65, 14, right?
Yes, you had to be 65 by December 31st of 2014 to file right now the 2015 application. Right. Okay, so I talked about prior year filings. Multi-owner and multi-unit homeowners, this is very important. So for our multi-owners, if you own your property with someone other than your spouse, which means that if your son or daughter is on your deed, a sister or brother, sometimes people put their children on the deed just for purposes, they don't live in the house, they don't pay the taxes, but they're on the deed so that the home transfers over to them at some point. If you're in that type of situation, you are a multi-owner, okay? And although your children may not live in the house or whoever else doesn't live in the house, you can only take the percentage of property taxes based on your percentage of ownership. So if you own the property with one other person, then you're eligible to claim 50% on your homestead benefit, on your property tax reimbursement application. So there are lines on the application that ask, are you a multi-owner? And then what is your percentage of ownership? It's usually based, unless it's otherwise indicated on your deed, it's always based on the number of people owning the property. Husband and wife are always considered one person, okay? So there's never a percentage of ownership when it's just husband and wife. That only comes into play when you have other people on the deed to the home. If anyone is in a life estate or life tenant situation, which is also kind of popular, when you add a child to the deed, you can keep life estate. Life estate means that you, for all intents and purposes, still own the property 100%. So you can claim 100% of the property taxes. Multi-unit, if you have a property that has more than one unit, it's a maximum of 4 units. Anything over 4 units, you won't qualify for the program. And then only 1 commercial unit. Okay, so if you have a storefront underneath and 2 apartments upstairs, that's fine. 1 commercial unit, 4 units maximum, and you can claim the percentage that you occupy. Now here's the trick with that. If you have a 2-family home and no one lives in the other unit and you use it for storage or you go back and forth, you can only claim 50% of the home. You can only claim 1 unit. That's your principal residence. So just make sure that when you're reading over the application that you answer those questions if you have multi-unit properties or you're multi-owner.
Can I just say something?
Sure.
I live in a condominium development. Okay. So when I see that 4 units or less, that kind of concerns me because my building has 8 units in it. Condominiums are zoned as single family homes in the state of New Jersey. They are not considered multi-unit properties. So when I fill out any type of property tax relief for myself, I'm filling it out as though I am a single family home owner. Okay, so just something for you to be aware of. In addition to that, if anybody owns a share in a co-op, co-op is also considered a single family unit, not a multiple unit home. Okay, so it's only those properties that are specifically zoned as more than 1 unit that would be what Tina's speaking towards right now.
Okay, so we're going to talk about some things that could change your base year once you've established it, just so that you're aware of it. And this was what Alexis was talking about earlier. If your income exceeds the income limit, that can change your base year. So once you've established yourself in the program, if you have a year where your income goes above those income limits, you basically won't qualify for that year and you'll have to start again new the next year. Okay, so it'll change your base year property taxes to the next year that you qualify. What happens with that is because you have to qualify for 2 consecutive years to get a reimbursement, if you exceed the income limit in 1 year, you won't re-qualify for 2 years, okay? So if you exceeded the 2015 income limit, you don't qualify on the 2016 application either because we'd be looking for 2015 and 16. So you have to make sure you qualify for 2 years once you've exceeded the income limit. This is also, though, when we reduce the income like we did this year from $87,000 to $70,000, but we said that if you fell in the middle, you get to keep your base year. That helps in some of these situations where you may have been in the program for years, you went a little above the $70,000, but you stayed below that $87,000. That means you don't have to reestablish your base year. You get to keep your base year, but you don't get a check. So that's where that little gap kind of helps some people that may go over by a little bit. It helps you not have to wait another 2 years. So the other thing that can change your base year is if your property taxes go below your base year. So if your property taxes were $5,000 in 2014 and $6,000 in 15, and then all of a sudden in 16 they go to $3,000, there's nothing to reimburse you. They're lower than your base year.
What town is that?
I don't know a lot about I'm not even gonna say it. I feel like I'll get yelled at.
We could tell by the mumbles that was a popular idea.
Sorry. So anyhow, if your property taxes go below your base year, you will have to reestablish a base year. But ultimately, that's a good thing because you're reestablishing a base year at a much lower amount. So as they start to rise again, you'll get bigger reimbursements. The other things that can change your base year are added assessments, which we're going to talk about in a minute, and if you move. And we'll talk about that more in a minute as well. We did make some adjustments a few years ago for people who are moving, downsizing, things like that, where you don't have to wait quite as long to re-qualify if you move. Oh. Sorry. I know. So reevaluations and reassessments. This is one of those things that can change your base year. So added assessments they will change your base year. An added assessment is where you make improvements to your home, and your property taxes are reassessed. Okay, so if you're making the improvements to your home and your property taxes are reassessed, that reassessment will, for property tax reimbursement, we are going to apply it to your base year and the current year. So I don't think it actually changes the reimbursement a lot because we're adjusting both. But you're not going to get a larger reimbursement if you made the adjustments to your home. Reevaluation is a little different. So if your town reevaluates your property taxes either on a whole as the whole town or individually, and they increase or decrease the property taxes, that amount is only going to affect your current year property taxes. We are not going to adjust your base year. So if the town reevaluates you and you go up by a lot, your base year will still remain at that low amount and your reimbursement will go up with the reevaluation. Okay? Does anybody have any questions about that?
One part of it actually makes sense.
Yep.
So the Form PTR1C, this is where I said that if you move, we made some adjustments to the program so that you don't have to wait quite as long to requalify. The first time you're qualifying, you have to be in your home for 3 full years. If you are already in the program and already receiving reimbursements and you downsize, move to a new home, you only have to be in the new home for 2 years to qualify. We don't make you wait the 3 years, okay? So, and the reason that you have to be in the new home for 2 years is just so that we can get that difference between the 2 years worth of property taxes. So if that's your situation, there's a form PTR1C that you do have to file. We are pretty good at recognizing who needs these forms within our own records. So generally, if there's the change of address and we see that you moved, we will send you this form when it's time after the 2 years. If you know you're in that situation and you didn't get the form, make sure that you call the call center. We are happy to get you one if for whatever reason the system didn't generate one. Okay, so 2 years in the new home, special form that needs to be filled out, and if you don't get one, make sure you call us. So proof of property taxes with every application. You have to submit proof of property taxes. So for first-time filers filing the PTR1 form, the proof of property taxes, in that book, there's a form PTR1A or 1B if you're a mobile homeowner. 1A is for homeowners, 1B is for mobile homeowners. PTR2 for applicants who are continuing the program, it's 2A and 2B. These forms you take directly to your tax collector's office. They fill them out for you, certifying what your property taxes are for the years that you're applying. They stamp the form for you, and it gets mailed in with your application. This is the absolute easiest way to verify your property taxes. We have other options, but they're more difficult. The other options are copies of your bills and canceled checks or receipts for every quarter. Okay, so you have to have your final property tax bill for the year and all of the checks for every quarter or receipts for every quarter. It's much more difficult to kind of consolidate all that information. So we do suggest that you get the form filled out by the tax collector's office. That's the easiest way to go. So you guys have the books. So I'm sure if you've been looking through them, you've already seen the form. We have updated them over the last few years. If you ever saw them before, they had tiny little circles kind of in the words and easily missed and, hard to process. So we did update the forms. We made them much more clear. The only thing that might not be clear is we ask you if you were 65 twice for both years. And we kind of know if you were 65 in one year, you were probably 65 in the next. But if you don't fill out both circles, our system will not recognize that you were 65 in the next year. So make sure that you pay attention to that.
No hanging or flopping checks.
And then we have a big box here toward the bottom of the page that tells you that for the first year you're filing, you have to send in proof of age or disability. Very important. We won't be able to process the application without it. So birth certificates, driver's license, church records. Disability is basically one item. It is a copy of your Social Security award letter. That's kind of it. So the really good thing, though, is the Social Security Administration, I believe, now lets you get those letters online. And they didn't before. That's new. So people sometimes had trouble getting copies if you were disabled for 20 years. Now you can get them online. Much easier. But you do have to send that in. And then the income worksheet is just go line by line through the income. You only have to write amounts on the lines that pertain to you. The other lines, you don't have to put zero. You don't have to put anything. In fact, I would suggest not putting anything. Zero can be picked up as anything. I've seen it happen. It could all of a sudden be $800,000. So just don't put anything on the lines that don't pertain to you. And then the last page of the application is mostly your home information, block and lot number. This is where you'll see, did you share ownership? You have multiple units? And then lines 13, 14, and 15 are where your property taxes go. So it directs you to that form PTR 1A that's certified by your town. You can pull the numbers right from that form. It almost sounds silly that I say it, but sometimes you'll see a number without the deductions added in there. Different numbers get put on these all the time, so pull it right from the form. And 15, you're just going to subtract 14 from 13, and that gives you your reimbursement. So you know the amount of your reimbursement before you even send the application in. That's what your check's going to be. As long as the state budget is passed and there's no changes, your check is going to be whatever's on line 15 as long as you did the calculation right. All right. So for 2015's application, the 2016 state budget has been passed. It was passed July 1st. We talked about that it changed the income limit to $70,000. But if you were between $70,000 and the $87,007 and haven't filed yet, I would still urge you to file and create your base year. Okay, that is very important because if you have a little drop in income or you're close or the income limits go up next year, you already want to have that base year established so that you're getting a larger reimbursement going forward. Earlier base year, always better. Okay, so even if you think I'm not going to get a check, it's not worth it, I'm not going to do it, fill it out and send it in and just get in the program. All right, so that's kind of property tax reimbursement. Does anybody have any questions? Yes.
How much money are we talking about if you do qualify for the $70,000? Can you get all your taxes back?
It's a reimbursement in the amount that your taxes have gone up. So here's how that works. If it's the first time you're filing, you're going to get the difference back between what your taxes went up from 2014 to 2015.
So it's a very small check.
To start, but here's the benefit. 2016, you're getting the difference back between 2016 and 2014.
Assuming you qualify for the 70,000 going down.
Right. Assuming you keep qualifying, yes. You have to continue to qualify.
We'll have to be on deeds.
But we have people who have been in this program for 10 years, let's say. Now they're getting back the difference between 2015 and 2005. So that maybe $100, $200 per year in 10 years is maybe $2,000. So it pays, even though it seems little in the beginning. Okay?
It's a long-term investment.
Pretty much.
Well, it kind of is when you look back over time. I mean, we have people that have been in the program since 1997.
Yeah.
Can you imagine? So other property tax, if we don't have any more questions about property tax reimbursement, the other property tax relief programs that are administered by your local municipality, which we did talk a little bit about earlier, are the senior deduction, veterans deductions, disabled deductions. and property tax exemption for disabled veterans. So you can contact your local municipalities for that information. And then we have contact information for you guys here for us. For homestead benefit, it's 1-888-238-1233. And I'll leave this up for a minute if you want to write any of the phone numbers down. Property tax reimbursement, the phone number is on the front of your book, pre-printed on there. And then our customer service call center is 609-292-6400. They can answer any questions you have, account issues once you file your applications. So anything you need to know, they can help you with that. Our website is www.njtaxation.org. The applications for prior years are on our website in case you fall into a situation where you may have qualified a couple years ago. You can check that out. All the income limit history is also on our website under property tax reimbursement, so you can also take a look at that.
What's your extension?
Our extensions.
Oh, wrong word.
Does
Anybody have any more questions? Yes.
What other departments have access to these forms after you process them?
After we process them?
In other words, they're in your system, do they go throughout the state?
No.
In
No.
your department?
Just the Division of Taxation.
And the second question, is the rebate considered income for the future year in New Jersey?
No.
How about federal?
For federal, is it?
I think it depends on whether you like itemize or something like that. But yeah, it is. Your refunds and any type of relief is taxable federally, not for the state though.
Yeah.
Yeah.
We just ran into a situation at work where our company, because of the ACA,
Mm-hmm.
the healthcare savings account for us,
Mm-hmm.
the Division of Taxation gave us wrong information.
Oh.
And the first payments were made January to the healthcare things, and then all of a sudden we all got notices that saying the state of New Jersey does not consider those tax-free.
Mm.
And we all got clobbered with
Ooh.
a tax bill. And we're now fighting it because we have proof that the state Division of Taxation said these are tax-free accounts, and now they're saying they're not. So that was a very good question about the income.
Yeah.
Yeah, for New Jersey, it definitely is not. Homestead and property tax reimbursement.
That's another question for me. If I'm still working with my present employer and they're continuing this program on, do I have to declare that as income?
Declare.
That payments made to me to a healthcare savings account. I'm not making the payment. I'm putting money in along with it. But my employer is giving me $1,500 a year. 2 payments of $750.
Is it listed as wages on your W-2?
I have to look. It might just be.
That may be the deciding
That's
factor.
the deciding factor. If it's listed as wages,
Guys, give us just a couple more minutes.
if it's listed as wages on your W-2, then it's going to be considered wages for this program. That's the only kind of income that it would be. It would be wages. Yeah, if it's considered wages.
Because they also make a payment, I put in 10% of my salary, for a 401k and they match the 5%.
Right. For 401k would be considered a retirement income. So that slide I spoke about with pension annuities and how that's calculated, you would use whatever your New Jersey taxable portion was. 401ks generally, it's tax exempt going in. It's taxable when it comes out. Yeah. If you ever have a question, and this is for anyone, as to whether or not a category of income is included for property tax reimbursement purposes, there's a list on page 3 of the application instructions that specifically states each type of income that is considered exempt. If it's not on this page, it's considered included. Okay?
There's a line on the income worksheet that says other.
Right.
So if it's not exempt, it's other.
That's right.
For sure.
Legal or illegal.
That's right.
Any other questions for us this evening? Great. Well, we thank you so much for having us.
Thank you.
Thank you.